Hello, it's a busy Monday morning and the start of a new week. Welcome to Market Insights. I am Lavina Emma. So on today's show, we will discuss how the Nigerian Exchange Limited closed trading last week Friday. And in the second segment of the program, we will also discuss lithium as a source of clean energy in Nigeria. So let's get right into perspective. So last week, the Nigerian Exchange Limited all-share index and equities market capitalization depreciated by 1.39% to close the week ended Friday, 26th April at 98,152 points and 55.512 trillion naira respectively. So in all, 27 equities appreciated in price, while 43 equities depreciated in price and 84 equities remained unchanged. So what does a 1.39% dip mean for investors? Now, this is a very important point to note here. The stock market is dynamic and short-term fluctuations are inevitable. So yes, a 1.39% dip is very noteworthy. It isn't necessarily a cause for alarm. So it's important to remember that healthy markets experience both growth and correction periods. So now investors with a long-term perspective should view this as a potential buying opportunity. So when stock prices fall, it can present an attractive entry point for quality companies. So on today's show, in the stock market segment, we will discuss the factors that contributed to this dip and analyze expert insights to help you navigate the current market climate. So to discuss these issues in the Nigerian Exchange Limited and how the market closed last week Friday and also the 1.39% dip is Vincent Oshoma. He is the head capital markets and the chief dealer for Interstate Securities Limited, and he's joining us virtually this morning. Welcome to Market Insights, Vincent Oshoma.
Good morning. Thanks for having me.
Yes, I'm glad to have you here. How are you doing this morning, the start of another new week?
I'm fine.
It's good to
And
hear.
you?
Okay, so I mentioned that the market had a 1.39% dip as it closed on Friday, 26th April. So what does this mean for investors? I know this is a somewhat negative closure for the market last week. So what does it mean for investors this new week that we're entering now?
Yes, like you rightly mentioned, the market closed 1.3% negative for last week. So it's not far-fetched from what was expected, because when you look at current realities in the market, the increase in rates and also current realities in the economy, inflation and other factors. So it's going quite surprising. And also the recent announced recapitalization. So a lot of these factors have had an impact in our market recently. So, but when we see a depreciation in the market, what I can say is that it's not far-fetched from what was expected, but it also creates opportunities for investors, especially those with long-term horizon, to look at opportunities in the market. You know, in the market, you have seasons of depreciation and seasons of appreciation. So when you have some level of depreciation in the market, bearish moments in the market, it creates opportunities for investors to analyze the market and identify those opportunities and make investments.
Okay, very true. But last week we also noted that 27 equities appreciated in price during the week, and also that was last week Friday, and 13 equities, which the previous week it was 13 equities, and then the week which ended for April 26, Friday, April 26, 27 equities appreciated in price. So what factors caused this? Because we can see there's quite a difference in the way it closed the previous week, the upper week, and the way it closed last week Friday, with difference of 27 equities and 13 equities. What factors do you think would have caused this?
And if you look at it, it has to do with some level of positive optimism in the market. Not quite there to the level of recording a positive performance, but we have seen some level of renewed interest in the market. That's why we see some stuff. Because when you look at some of those stocks, at the end of the week, we saw some stocks that were previously experiencing losses having renewed interest, as people are looking at two factors. One, some persons are taking interest with respect to the closure dates of those stocks, and also some also looking at the expected Q1 results. We have started seeing some Q1 results start coming from some companies, and as expected, those Q1 results will definitely drive performance and affect market. Like, for example, CAP released their result, and there was a surge in their earnings, over 100% increase in their top line and also their bottom line. And as a result of that, we saw it registering as one of the top performance in terms of appreciation for the week. So we'll continue to see such things affecting the market. And also some companies that have some issues, as those issues are being resolved, we see it affecting the market.
Okay. Let's also talk about the equities that depreciated last week. 43 equities depreciated last week, which is lower than what we had in the preceding week, while 84 equities remained unchanged. So, and 79 was recorded in the upper week, not this week that ended on 26 April, but in the previous week, it was 79 equities that remained unchanged, while 84 equities remained unchanged, and it was 43 equities that depreciated last week. So why it looks like every week there seems to be an increase in the numbers of equities that are remaining unchanged and equities that are depreciating. So what factors are also responsible for this?
Yeah, like you mentioned, you see that there was an increase in the equities that appreciated, and also there was a decrease in the equities that depreciated, and also we now saw an increase in the ones that remain unchanged. And like I said, it has to do with a renewed optimism, positive optimism in the market, and people taking position in some stocks. Whereas for the ones that we saw depreciating, we saw some information that came to the market. For example, First Bank, we saw the announcement of the resignation of the MD of the bank. We saw how it affected the stock during the week, but at the end of the week, we saw some started pulling back, renewed interest in the stock. Same with MTN. So I think it has to do with information that is being released in the market. So investors are having renewed interest in the market. That's why I saw some level of increase. At the end of the week, I think outside the major stock like for MTN and also for Nestle that registered a major decrease, I don't think we have seen that kind of loss in the market, because we saw some of the stocks have been pulling back some of their losses.
Okay, before we continue, there seems to be some noise in your background, Vincent Oshoma. I don't know what's causing this. Are you also hearing the same thing?
No, I can hear you clearly.
Okay. Let's talk about our commercial banks. Yes, as you know, after the CBN directive that commercial banks should increase their capital base to a minimum of 500 billion naira, and all banks in the country currently are moving towards that. But it's there's a chance that they'll want to get this majority of funds from the capital markets by selling shares there. So do you really think that this Nigerian banking stocks will also be affected by this? I know a lot of big banks want to start selling shares so that they can meet up with this capital base. So before I move further, let me just hear what your thoughts are on this, first of all.
Yeah, definitely they will have to come to the markets to raise capital. We have already seen a lot of the banks announcing their plan to raise capital. For the big banks, most of them are first of all, going for right issue. Definitely those shares will be listed in the market and definitely impact on our market. We expect to see other banks as they approach the deadline to release their plan to CBN. We'll see them coming up with their plans on how to meet the recent minimum capitalization. You know that the fact that CBN expect the banks to meet the new minimum capitalization based on their paid up share capital and also their share premium. And currently, most of the banks are below that level. Definitely, they have to come to the market to raise money. So we expect to see the things unfolding as time goes on. Some of the banks have already started having their meetings to approve the capital raise. So after that, they have to go to the regulators to get the approvals before bringing it to the market. And definitely we expect to see investors reacting to such capital raise.
Okay. The reason I asked this, last week the Nigerian banking stocks they saw a decline in their stocks. It slid down from it was a major sliding down for them in over 10 years, and the stocks have actually slid down to over 25.75%, according to data from NGX. So this is a dramatic fall, which wasn't the case a few months back in March. They had a very good performance in March with a a 4.58%. So a lot of analysts are blaming it on the fact that banks are rushing to the capital market to generate this increase in their capital base. So this new, like the exchange group data said that the sliding down to 25.75%. As of April 27, it was quite a dramatic fall from 21.21%. So what are your thoughts on this?
Yeah, the major impact for the banking stocks, the major impact on their performance, because if you look at their full year performance for 2020, a lot of them announced their impressive results, with some of the big banks having EPS of about 20 naira, and also a lot of them paid good dividend, like we saw Zenith Bank paying and the final dividend of 3 naira 50 kobo. Same with UBA that paid the final dividend of 2 naira 30 kobo. I know that the market reacted, but I think the major impact on the bank, beyond their impressive performance and the current rates in the fixed income space, in a bid to attract foreign exchange into this economy, the CBN, and also because of inflation to curtail inflation, CBN has increased rates. We have seen rates increase from 18.75% to 24.75%. That's impressive. And that has impacted fixed income instruments. So we have seen a lot of movement from the market into the fixed income space. I know the banking sector actually controls a major size of the market in terms of the listed banks. The banking sector is a major part of the market. So as we see this increase in rates affecting the market, the biggest hit is expected to be the bank. Also, the expected capital raise is also have its own impact, because people are looking forward to experiencing dilution in their holdings, in the bank's holdings, in the short term. Once they go on to raise this money and list those shares, we'll see an initial dilution in the EPS and earnings of those banks. I think those are some of the things that people are looking at, and we have seen it affect the banks. But like I said, when we see this bearish move deep in the prices, some persons will also have to look at the opportunities, like we saw in First Bank. First Bank, after the announcement of the resignation of the MD, we saw it dip to as low as 18 naira something, but after a while, he started calling back those losses as people analyzed those stocks and started taking interest. So we expect to going to see those reaction, especially now that we are looking at increased rate and also some level of uncertainty with respect to how they are going to raise their money. So people will continue to look at those things, and it also makes short-term people taking short-term profits in the market. So once there is an appreciation in prices, people have to book those profits and also look at entering back. So that's what we are currently experiencing in the market.
Okay, well said, well said. So I think investors should be optimistic about this new week, that hopefully the markets will close on a bullish note then.
The major factor that will drive performance this week is the expected release of Q1 results. So we expect investors to react to those results. So when there's a surprise result, like we saw in CAP, you saw investors reacting to that result because it was an impressive performance. So for those that were going to post impressive result, what this result, we expect to see the investors react to those results. But that does not mean that we don't still have the impact, because current rates is still the high rate in the market system is still quite high, and also inflation is still relatively high. So meaning that there's still a lot of interest in the fixed income sector. So it has to do with investors taking some cherry picking opportunities in the market, looking at stocks that has values for short term and also for long term, and taking position in such stocks.
Well said. Okay, so now just before we round up, now how much responsibility should corporations and institutions bear in managing investor expectations during this kind of market fluctuation?
Yeah, it's the responsibility of the regulators and also for the issuers is to always release them. They're expected to release information that have impact on their prices once those information become available, which we have continued to see. And also the regulators always on them to release information to the market, because activities in the market is driven by information. So as long as investors, stakeholders release those information the market. Investors are expected to use those information to take informed decisions, especially in times like this where you have the market generally bearish mode in the market. Like I said, that it creates opportunities for discerning investors that will take those information being released, like the Q1 result being expected. Using those information to make informed decisions, because in our market, we still have a lot of opportunities in the market, because despite the challenges, despite some level of uncertainty, there's a lot of value in the market that people can actually take advantage of.
So much, Vincent Oshoma, for joining us this morning on Market Insight as we talked about how the markets fared last week and what we are to expect this new week. Thank you for joining us on the program, and we look forward to having you again on the program. Do have a wonderful day.
Thanks for having me.